morning once again, and welcome to the Haven Financial Group radio show. We appreciate you listening at any time, today, this week, next week, whenever the timing is right. And maybe there isn't a right timing, so maybe just pick up the phone and dial it. Give us a call at 612-504-8400. Visit us online at havenfinancialgroup.com. All kinds of retirement tools, calendar of educational events in the public setting at our education center, and we have all kinds of them. So go online. Kim brought in Glenn Ramey, our insurance specialist at Haven, because this last segment we're going to talk about a lot of things we don't want to talk about, like health care, the expenses, long-term care, and those retirement topic that is just not fun to talk about. So let's have Glenn talk about it.
Let's push it off on Glenn. Glenn, good to have you like always. We're talking about, sort of curating, tailoring a retirement plan specifically for an individual, because everybody's retirement plan is going to be a little bit different. But one of the things that I think is consistent throughout is that people need to know about health care and they need to prepare for what those health care expenses might be. Would you agree with that?
Oh, 100%, Kim. It's probably one of the most underestimated costs people are going to have in retirement. It's one that's often overlooked and not looked at in a complete picture, right? We think about our monthly budget and the premiums we might have to pay for healthcare, but are we taking into consideration out-of-pocket costs on those policies that we're accepting for insurance, out-of-pocket costs on medications that we might take, and eventually might get prescribed an expensive one that makes us meet those limits on our insurance that we're not used to having to incorporate into our annual costs in that regard. The growth of cost over time, that these things don't stay the same price for your whole life, right? Everything kind of goes up in cost. So a lot of factors I think people are overlooking or not considering when they're planning for retirement in relation to that healthcare topic.
So you've sat down across the table from a couple, we'll say, and they are in the process of planning. Where do you start with them?
What is their current situation? Right? Yeah. What do they have now? When are they doing things? And what are they looking for out of that insurance? And making sure they're truly getting a comparison of options, right? My first meeting is always going to be educational. I want to hear what's going on in your situation, and I want to inform you of the rules, the options, the costs I'm going to be aware of, so that before you're stepping into that, you already have a good idea of what you're looking at.
Yeah. One of the things I think a lot of people don't realize is that once you have made your decisions and you've chosen your plans, that doesn't mean you're locked into it for life.
Not necessarily, but there are some scenarios that could be true. So let's just talk very briefly about the two different types of Medicare plans we have available to ourselves when we join Medicare. Most individuals are either going to do what's called a Medicare Advantage plan, otherwise referred to as Medicare Part C. And those medical policies can be changed each year from one Medicare Advantage plan to another Medicare Advantage plan without your health ever being a barrier to making those plan changes. But when we talk about the alternative, the Medicare supplement or Medigap policy, that's not true. Those policies are only a guaranteed right to buy when we first start Medicare Part B. Now, it doesn't matter what Part A started, it's about that Part B benefits date. And we have 6 months after that Part B benefit begins that we are guaranteed the right to buy a specific type of Medicare plan, a Medigap or Medicare supplement policy. If we don't exercise that right within that time frame, we are now underwritten to qualify for that, meaning are you healthy enough? So our instinct is always going to be, give me the cheap insurance while I'm healthy, and I'll buy the more expensive insurance when I get sick. But the Medicare system doesn't allow that. Medicare says if you want a Medicare supplement plan, you have to be still healthy enough to qualify, or you have to be doing it when you first start Medicare, which is why I go back to reinforcing. It's so important to me when someone begins talking about Medicare that they learn about these different plans and their options and these rules. Because I tell clients all the time today, this healthcare decision you're going to make when you first start Medicare is not just about age 65, it's about age 85.
Sure, absolutely.
The beginning are absolutely going to have an impact on what you have for selections later in life.
All right. So that's an important thing for people to know and to understand. And maybe that's something that if you've never explored this part of your healthcare, you would not know. All the more reason to have a partner like the folks here at Haven Financial Group. Let's talk about long-term care. That's something that you also talk to people about. And that's also an expense that I think a lot of people don't factor in when they start to think about retirement.
I understand. Who wants to think about the end of life and what kind of health care we're going to need at that time? right? It's not a pleasant thought to go down, right? Rather think about spending money and having vacations and having fun rather than thinking about that end of care cost. And so a reminder to us that Medicare, our health insurance, does not have us protected against those healthcare costs. That Medicare is limited when it comes to home health care and nursing home care, right? And that you can reach a point where that insurance is not going to be paying any of those bills you're incurring. And you're going to have permanent needs that you need help with. And these costs are not insignificant, right? Right now in the state of Minnesota, the median cost to be in a long-term care facility in a semi-private room, not private, semi-private room, is now $130,000 a year. And the average stay is 3 years. We're talking almost $400,000 of potential cost that people aren't looking at on how they're going to address in their retirement planning. Because again, I understand it's not a pleasant thought to have, but it's such an important one, we think, that regardless of what your plan is, self-funded, buy insurance, whatever it is, you should have already had a plan before this ever happens.
Absolutely. And that's where you can step in, correct, Glenn?
100%. I think a lot of individuals are missing opportunities because they don't ask questions. Right? They make assumptions and they don't want to talk about because they think they already know what their options are. And I can tell you from experience, most people that come into my office to talk about long-term care know about one, maybe two different types of long-term care planning available. There's actually four. Right? Yeah. And most often the ones that seem most beneficial to consumers today are the ones they don't know about, the ones they haven't talked about. Hybrid and asset-based style long-term care policies that are there for individuals to help offset those additional costs that could occur when a long-term care event happens to either their husband or wife.
Sure. I'm sure that they don't ask questions, but I think a lot of that, don't you think, has to do with the fact that people don't even know the questions to ask?
Agreed. Right. Again, I say, I don't care what the plan is as long as we have one, right? You have to talk about it, have the plan. You have to realistically address these concerns in a way that's going to inform you so you as a consumer can make good decisions about what is right for you and right for your family.
Absolutely. So what do you think is the biggest mistake short of, and I think you're going to just say just not doing this planning, but what's some of the mistakes that people make that you try to help them avoid and all the more reason why they need to come in and chat with a good partner?
You hit the nail on the head on the first one. It's just not
I know I did.
If we get past that part, it's people are afraid of the cost because we're not talking about something inexpensive to pay for. Again, having something that's going to pay a $500,000 potential medical bill for you is not an inexpensive type of thing to talk about. Right. What people don't often realize is there's more than one way to do that planning. Right? There's more than one way to solve that problem. Maybe it is just making sure we have enough in savings to cover that cost if it occurs. Maybe it's using a hybrid of a life insurance long-term care plan to cover those bills that has flexible structures on how we can fund those insurance policies. Maybe even having them paid off before we even hit retirement. So it's no longer expense we're incurring in retirement. It's when we address what we still had working income coming in. And for those really good savers right now, asset-based long-term care seems to be what they want to do. Rather than buying an insurance policy and paying a premium to someone, let's reposition an amount of savings that we have. And now that savings is leveraged against those long-term care events. So if we need it, we have more money coming in to cover those costs. But more importantly, if we don't, we didn't give up any of that money in planning.
Yeah, absolutely. Planning, that is what it's all about, and sooner rather than later. Glenn, one final question, and that would be just for healthcare overall. There are dates, there are things that people need to try to hit, correct?
Yeah. So, right, if we talk about Medicare, it's obviously age 65 unless there's illnesses or disability that cause people to qualify early. Right? Medicare is going to give us a 7-month enrollment period, 3 months before, 3 months after that birth month to get our Medicare in order without fearing that we're late or incurring any penalties. But here is that one part that people often don't know, and I have to remind individuals almost on a daily basis of this Medicare rule. You are allowed to delay it if you're still having work insurance as long as that employer has 20 or more full-time employees and that employer offers credible health care, just meaning as good or better than Medicare. And if you have credible health care from a large employer, Medicare might be optional until they're ready to leave that job. And for many individuals, that health care through the job might be the cheaper, more appropriate insurance to have, but people get confused by these rules and think they need to sign up for Medicare when they actually don't.
Very good. So many things to know when it comes to healthcare, but it's just so important to get that plan started as soon as possible. Glenn Ramey, thanks very much. Larry, your final words about those who are looking for healthcare.
How did you know I had some final words, which I do, by the
Well,
way?
I know you well.
Listeners, ask yourself, do you have all the retirement puzzle pieces? Maybe you're not even to retirement. Maybe you're listening and you're younger. This applies to you as well. Start a plan, get it started. You're going to be happy you did in the future. But do you have all the retirement puzzle pieces? If something intriguing or something resonating with you, come in and visit with us. Glenn just mentioned long-term care, much better viable options. Maybe you don't know, maybe you have some, you don't know what you have, how it works. Come and visit with Glenn on life insurance reviews. We encourage it because oftentimes people find out that, oh my, something happened to my life insurance and I don't like the result. Maybe you have Medicare's coming up. Maybe you have questions. Maybe you're getting close to 65. Annual enrollment. You should shop it out every year. Come visit with Glenn or Isabel on that. The investment team. Do you know anything about your investment portfolio or how much risk? That might be a reason. Estate planning with Carrie, Lexi, or Keith are estate planning attorneys. Lance, who was on early in the show about tax planning, tax prep, and the list goes on, and it may seem overwhelming, but if you have a good partner, it doesn't have to be overwhelming. It can be made simple to the degree that you maybe understand it better than you ever have before, and you have nothing to lose by coming in and visiting with any of us about these topics.
612-504-8400 is how you reach the folks at Haven Financial Group. This has been another great show.
It has been, Kim. Good to be with you, and stay cool, and we'll see you next week.